guys? TraderJud here, back with you with another weekly Forex recap video where I go over the 10 pairs that we went over during the weekly Forex Outlook video on Monday, and we recap them. We look at some of the possible scenarios that you could have traded, kind of take a look at the what happened versus what I predicted would happen, kind of the outlooks that I had that could possibly have resulted. And so we're looking at EUR USD right here. We can see that in this area is where the week started at, so we still had the rejections of this horizontal line that's up top. Never did quite reach the zone up here. However, we did have 4 rejections of this horizontal line, and so you could have taken a sell based off of this massive bearish hammer. However, because that was going into the zone, I probably would have elected not to. If you did, then you would have had very good profits off of that. However, taking the more conservative approach, I waited until price broke this trend line, came back and retested on the next candlestick. That candlestick did close bearish. That's where my entry would have been. Putting the stop loss above where that wick is, or where the retest of that trend line happened. It's a simple 2-to-1 trade. The way I set my stop losses to take profits most often is I set the stop loss first and then just double it for the take profit. Not always. That's just the simplest method of doing it. I also base it off of a number of different things: market structure. Sometimes I use expansions to set take profits. It's very dependent on what it is, but for this is a very simple 2-to-1 trade. 25 pip stop loss and 50 pip take profit that would have hit relatively quickly. So like I said, if you were an aggressive trader, you would have gotten in off of this large pin bar to the upside, which was the 4th retest of this horizontal line, which is just previous market structure, and you could have sold down to this trend line and then re-entered off of the break and the retest of the trend line, something along those lines. USD JPY, you can see where we entered. I believe that this candlestick is actually where I closed the video on Monday, and so on Monday you would have gotten in on this into this trade based off of the retest of this trend line. Again, this is just drawn as a very simple set your stop loss and then set your take profit double, and this also resulted in being pretty much a 25 pip stop loss to a 50 pip take profit. You could have adjusted the stop loss as price went up. However, the reason why I don't usually recommend doing that is for these reasons right here. As you can see, price came up to the zone and looked like it was going to reject the zone. It broke through that trend line. Price came back up to on top of the trend line. Then we had another bearish candlestick that wasn't engulfing. Then we had a pin bar to the downside, and as you can see, price shot up. And so typically I don't like moving my stop losses. I know that a lot of people preach that. It's just not a preferred method of my own, and so I typically don't recommend doing that. However, it's completely up to you. I definitely recommend that everybody play around with stuff and find what works best for you, especially if you're new. If you're new and you haven't found anything that's worked best for you, stick to one thing for a longer period of time. It's definitely a trial and error process. Gold is up next. As you can see, gold was riding up this this trend line. What I would have taken this trade off of, we can see this pin bar to the upside, the doji after that pin bar, and then a bearish candlestick off of that. I probably would have taken an entry right there. In fact, I ended up taking an entry before then. But if I was recommending it to somebody else, that's where I would take my entry. And let me just clarify that this is based off of just what these charts are saying. And so my trades that I recommend based off of these charts are always going to be based off of the candlestick close, which is what I do recommend. But real life happens, and so sometimes life restraints and some similar circumstances to that, time restraints more or less, prohibit you from entering or exiting at exactly market or candlestick close or candlestick open it, depending on how you want to look at it. And so that's a big reason why I don't list exactly what my trades are here, because ideally in a perfect world you would enter at candlestick closes. However, we don't live in a perfect world, so that's something to be considered. Something else to be considered is that the 1200 level is right here. And so to me, this looks like its price is attempting to reject the 1200 level. That's why we've had all this consolidation to the left that you can see the price bouncing between these two zones. To me, it looks like if you were to look at this on a larger scale, the daily time frame and the weekly time frame, you would see multiple rejections of the 1200 level. And so, again, to me, this just looks like it's rejecting that 1200 level. And so if you didn't get in on this bearish candlestick right here, obviously you had a bullish engulfing candlestick after that, and then you had it followed up by a bearish engulfing candlestick. I would have definitely entered in off of that bearish engulfing candlestick right there. 2-to-1 trade, same thing. Set stop loss above this trend line, immediately above this trend line. So if we were to scale this over, our entry right there would have been immediately above that trend line. And then, as you can see, the trade executed just fine. It did look like it was going to reject this zone and continue back up, but then news came out. I believe it was on Thursday that this news came out and just drove the price of gold way down. So you can see a significant drop right there. This is a 42 pip stop loss for an 85 pip take profit. EA, relatively simple trade with EA, kept this trend line consistent. Price broke through, retested it, entered on the close of that candlestick. I put the stop loss above this zone, and so 46 pip stop loss for a 92 pip take profit. You would have hit take profit in 4 candlesticks. So relatively easy trade with the EA. Didn't really see anything good with GN. If you look where GN started, it looked like we could go bearish. Then GN bounced above this horizontal line. It looked like we can go bullish. GN bounced back below it. We never really had any candlestick analysis to tell us it was going either direction. We had pin bars to the upside and the downside, or points of failure to the upside and the downside before it finally made up his mind. And with this candlestick coming on Friday morning, I wouldn't have even entered into it. I'll just wait until next week. So nothing really wild and exciting with GN this week. AUD USD, we had this massive hammer on AUD USD. Would not have entered off of that. And this is actually my entry for that. You could have entered off of that pin bar. If you wanted to take this safer, you would have waited for the break of this trend line. However, I entered in off of this pin bar right here, and so technically your entry would have been at the base of that pin bar, something like that, and then your stop loss would be above this trend line up here, and take profit in this vicinity down here. So that's what you're looking for with AU. EJ is up next. Same thing as it was with EA, I believe. EJ, we had a break and a retest, and then a bearish candlestick after the retest. That's where your entry is. If you wanted to be safer, you could have entered on off of the next candlestick. However, the reason I don't really recommend doing that, and the reason for that is because your risk-reward ratio would be really bad. Stop loss is set above this upper trend line. Take profit would be set 2-to-1, so it's a 59 pip stop loss to 118 pip take profit, and it would have hit. But this is just a good entry. Even if you, with this, you have the solid break of this trend line, and you have the third rejection of this this upper trend line. So that shows me that it's seriously rejecting this upper trend line. You have the retest of the trend line that it broke, and then a bearish candlestick confirming the bearishness of this move. I would have been very comfortable selling this, and I did. I sold this down to this zone. So, like I said, if you were an extremely conservative trader, then you would have wanted to wait for one more candlestick. But at that moment in time, it would have been quote unquote too late to enter, and I would not recommend entering there because your stop loss would have been really, really large compared to what the take profit is more than likely going to be. even if you were to sell it down to this trend line down here. That's still a very large stop loss for it might be a 1.5 to 1 trade, something like that. UCAD is up next. We had some bullish movement to start the week out with UCAD. And then Thursday and Friday we had a lot of bearish movement, right? So UCAD broke through this. I added this horizontal line. It was not on Monday's chart. That's why it's red. I added this horizontal line. It's based off of these two rejections right here. All of these rejections right here before price broke through, and the rejections over here as well. And so I added that. I added it in the middle of the week. And this is how I would have based this trade. You had price break through that horizontal line, then break back below with this large bearish engulfing candlestick. Candlestick after that was bullish, but it was retesting that line that had been broken twice now. And then we had two bearish candlesticks to follow that up. That's where your entry should be. And then to accurately put your stop loss, I put it right on this next horizontal line, or the next support and resistance level up, and then set a 2-to-1 trade, and it would have been 53 pip stop loss to 116 pip take profit based off of that entry. GBP USD is up next. So we had the rejection of this horizontal line. That's a head and shoulders, and so comfortable entering in off of that. I actually didn't get that entry, and so you had one bearish candlestick. This is the entry that I did get based off of this candlestick close, and yeah, so you set your stop loss above previous market structure, which would be the top of this pin bar, and set a 2-to-1 trade. Stop loss 67 pips, take profit 135 pips, and you would have hit it today. And then GJ was the only other pair. As you can see, GJ, not a lot of movement with this. I didn't see any good opportunities to trade this. So that's just personal preference. You'll see in either Sunday or Monday, whenever I post the weekly charting series for next week, you'll see how I'm going to make some changes to this this chart specifically. There's going to be a few changes made to better suit next week's trading opportunities. But that's it for now. So thank you guys for watching. I hope that you all had a profitable week, and I hope that you tune back in for Sunday's weekly charting series. If you do like this this weekly recap, if you are learning things from this, let me know in the comment section down below, or just like the video. If you haven't already, subscribe to the channel. I really appreciate you guys. I'm going to be doing some sort of giveaway at 100 subscribers. So we're about 30 people away. So share this with your friends, share this with your family, share this with people or the groups that you're involved with, just to get the word out there. I am just trying to help people, trying to help people grow their profits, right? We're trying to grow together, and so this is really just designed to be helpful, and hopefully you learn something. Yeah, that's it. So you guys enjoy your weekend. I will see you on Sunday night or Monday morning. I haven't decided yet.